Hi everyone, it's Robert from the Outlier customer success team. I got a request about a day ago to go back over TripAdvisor, which is an analysis I did about a month ago, and follow up and kind of give my take on what I see now. So if you haven't watched that analysis, it would probably be beneficial to you to watch that before watching this. I'll try to hit on the main points that I made during that analysis throughout this discussion, but it's a quick 7-minute watch and is probably worth taking a look at before you watch this. So I did that analysis back on May 11th, I believe, and TripAdvisor was around around $44-$45 when I took a look at it. Some of the things I liked when I did that analysis was the slope of the oscillator starting to bottom out and looked like it was starting to curl up. I like that. The position of the oscillator, I'm not going to go and show you the max so that we can see the range, but I can tell you that the oscillator here on May 11th was lower even than the low made last March, which we don't see very often. Usually that last March low in most oscillators is kind of the low. So I thought that was really interesting, and it was certainly low enough that I liked it being at the bottom of that range, even through that range. So those were two positive things for me. The heat map, obviously dark red, oscillator flattening and starting to go up, were all really good things. But when I kind of looked at the price action in Trip, and I'm going to bring up a daily chart right now of that, there were some things I noticed and kind of talked about in that discussion. So in the middle of February, Trip went through this 38 price, I think, and you can see these are daily bars. You can see the volatility just skyrocket in the stock as it went from 38 into the 60s, and that continued throughout May and as it kind of headed back down. I noted in my prior discussion that the implied volatility of the options when I did that analysis was around 50, and that there was obviously a lot of volatility and a lot of movement in Trip at that point. So although Outlier was showing some really good signals and certainly warranted taking a very close look at Trip, my final analysis was that I wanted to see one of two things. I either wanted to see an up move established or consolidation to the point where I was comfortable buying a dip, and I really wanted to kind of emphasize buying a dip because with the volatility that Trip was experiencing, once it consolidated, I wasn't necessarily looking for a breakout. I either wanted an up move to be established or consolidation where I could buy kind of an area where a bottom was found. So that was where we left it in May, and as you can see, from that point on, we continued to sell off. So from my standpoint, I didn't see an up move established. I didn't see consolidation occur, and we actually got really, really close to this area that it broke through back in February, which I also noted we were heading towards in my previous analysis. So those are interesting data points to me that we kind of retraced this entire crazy move all the way back. So when it's in the beginning of June, we did have an up move here, and for me, this is still not an established up move given what we saw. In fact, the fact that we came off the next day back into this range was not enough for me to aggressively want to do anything. However, I can tell you that from my analysis, and it's important to stress that from my analysis, because my analysis is going to be different than yours, and you have to kind of define if you agree with my statement that we should be looking for an established up move or consolidation, what that means to you, because that's going to be incorporated into your trade strategy, your risk strategy once you put that trade on, and what I think is probably different than what you think. But I do believe Trip has gotten into a consolidation state at this point, and when I look at Outlier, I think that on June 11th, I do not have a position on in Trip. I've moved on to some other things, but I think around June 11th, Trip got down to about 41, around 41, and given what I see, that would have been a level I was comfortable entering in. So, if I look at what Outlier is showing on June 11th, we still have a fairly positive slope going in the oscillator. The heat map is fading, but it's still red-ish, which is fine with me. So I think that if I were trading it, I would have a position on right now around 41 from June 11th. So what's happened since then is kind of interesting, and these are the kind of things that I really think you can get a lot of value out of Outlier that people aren't necessarily looking at Outlier for. So if I am long around 41, and again, it got down to about 39 was the low of this move, I believe. As this over these next couple days, as the oscillator starts to flatten out, I would be looking at that from a risk control standpoint, and I would be thinking about how I want to adjust my stop or my definition of where I'm wrong in this trade. And I think that's really important to be thinking about when you do enter a trade, because you can be wrong. And if you're not thinking about what your exit is, you're doing yourself a disservice from a risk management standpoint. And I think that's one of the things that's way too widely overlooked. People are willing to take 10% out of a trade, yet they'll do that 4 times in a row, and then on their 5th trade, they lose 50% and sit there and say it's going to go back up. And I don't think that in the end that gives you a whole lot of money. So I would be using this definitely, if I was in this trade, this flattening oscillator, as a risk tool. And again, with the heat map changing color as well, I might be very quick to pull the trigger that I'm wrong if I saw this oscillator start to dip back down, head negative, and the heat map move into a white or a blue zone. Now, having said that, the heat map can move into a white or a blue zone while a stock is continuing a move higher. So I like what I'm seeing here from Outlier from a risk assessment standpoint, and I think it's important to use what Outlier is showing you to help you in your risk management of a trade. So I think 41 is a great area if you're interested in trying Trip, given what we've seen. And again, like with the oscillator flattening out here, it doesn't concern me nearly as much as it would if the oscillator started this up move, at the 50% point of its range. Keep in mind that this oscillator was down here at the bottom of its range when it started going up. So that's also something that I might give this a little bit more room on, and kind of give it some time to make sure that this isn't the right trade. So that's kind of what I'm looking at with Trip right now. I think 41 is probably a reasonable area to try it if you're interested in trying it. And again, when you are trying it, you are overlapping it with the other analysis that you do. I think you need to do that in addition to looking at what Outlier is telling you. So that's what Trip is telling me right now. I would be watching this oscillator very carefully. That's it. Thank you for watching.